Hey, welcome to Losing with Ken. Today we'll be looking at cryptocurrencies and taxation. So it says here that making money from cryptocurrencies, the taxman may call on you. Okay, fine, call on me. Well, okay. So it targets miners, forgers, hobbyists, and traders. Different rules apply. Okay, so let me see if the article states any of those rules. And it says, just don't assume crypto investment is somehow immune to taxation. Okay, so IRAS, right? So it's really like income tax. I mean, for normal people, unless I don't think anybody runs a crypto business. And it says here that IRAS has issued 2 tax guides on cryptocurrencies. Okay, with one focusing on income tax and the other on GST. So I think as a normal investor, we'll be looking at the income tax portion. So usually in Singapore, I mean not usually, it is the case that capital gains are not taxable, unlike other countries like the US or China or whatever. So in this case, most people would think that if you buy a crypto at a low price and you sell it off at a high price, it should be considered a a capital gain, so it's therefore not taxable. But now with these 2 e-guides, I think we better take a look and see if there's any misunderstanding or that happens here. Okay, I'm going through the article. Maybe there's some summary on the text guide. So I think this paragraph is just explaining what cryptocurrency is all about. And yeah, this is about mining. Okay, so it says no express guidance has been given for forging. Never mind. Okay, IRAS has indicated that tokens earned from mining will not be taxed in Singapore. Okay, this makes sense because you're just creating something and you're not putting it into circulation to exchange for goods or convert it to fiat currency. So I think a lot of fluff in this article. So maybe let's jump into the e-tax guide proper. So we have the IRAS e-tax guide, income tax treatment of digital tokens. So let's look for the keyword capital, capital, because we're only interested in capital. So for you, most of the people, it will be just a case of buying and selling. I think nowadays it's not that eco-friendly to do mining, and the returns are not as great already. So everybody's just trading. So let's take a look at this ICO. Capital in nature and thus not taxable. Okay. Proceeds from the issuance of security token akin to proceeds of issuance of securities. Okay, so they are relating initial coin offerings to newly issued securities, which is capital in nature and thus not taxable. Okay, that's a good thing. So this is for ICO. What about, let's say if I buy and sell? Let's see if we can find here. Tax treatment of security token. Capital. Where the security token is disposed by the holder, tax treatment of the gain and loss on disposal will depend whether the security token is capital or revenue asset to the token holder, and accordingly whether gain or loss is capital or revenue in nature. So here's the keyword. Gain or loss is capital or revenue in nature. So for capital gains, as I mentioned, so if you buy something at a low price and you sell it at a high price, then it's considered capital gain. In the case for crypto, revenue. So to generate revenue in crypto would be crypto lending, crypto staking. But I think there's no platform that allows you to really, yeah, that is right, there's crypto staking. So you put in your crypto into that platform and they give you so-called a certain percentage of whatever cryptos amount you put in. So I guess, oh, okay. So for just like buying and selling, yeah, no taxes. But if it's somehow being made to generate revenue, so in this case, it will be a case where you stake your crypto into some platform and they return you some other cryptos. Then the cryptos that you gain, then the IRAS will need to convert them to a fiat currency value and tax you as income. So complicated. So let's take a look at the next capital. Tax treatment of security tokens. Okay, this is the current one. Trust capital in nature, NXP. Maybe let's take a look at NXP. So I just quickly scan through the guide. Okay, we're at the Etax already. Receiving payment token as a payment for goods and service performed by business. Tax treatment. Contractually due to receive an agreed value that is payable by payer. Okay, so if you are replacing, let's say, cash for the goods and payment you carry out, and you choose to, let's say for example, accept bitcoins, yes, then it will be taxable because, yeah, you're still taking income. Let's take a look at receiving as a payment for employment services. Employees remunerated in payment tokens with bitcoins. Okay, so if it's wages, it's taxable. Straightforward. It's just replacing like cash with bitcoins, etc. The purchasing of a payment token is not taxable because you're buying something. Why will it be taxed? Receiving payment token, okay, this already mentioned before, is not taxable. So let's jump to NXP. NXP. Taxability of proceeds. Okay, this is for the issuance of security. Issuance of payment tokens. Okay. So I think this don't involve really normal people because who the hell does ICO? Okay, well, I guess it's quite clear. So let's jump back to the main article. There's a multitude of ways that investors could potentially make money from cryptocurrencies, some of which more likely to be taxable than others. So this is an advertisement for this company. Start seeking tax advice early. Well, I guess it's not taxable. Haha. I mean, how can they tax? How would they be able to tax? Well, of course they can check through if you go through any exchanges and they sort of, when you sell the cryptos and they transfer the money back to your bank account, then they can really see that, oh, you receive a payment. But I think for most people, if it's capital gains, it's not really taxable. I thought I saw the word trader just now. Buying and selling very frequently with the intention to make a crypto. Oh, so if this is considered your income where you carry out trading every day for cryptos, then it's considered trade income. And it will be taxable. Yeah. So if I'm gainfully employed and I sell cryptos, no. Sell and buy cryptos, no, probably it won't be taxed. But if you're doing like tens of trades per day, probably they will be interested in you. But I mean, how would they know? Well, now actually all platforms have to be registered or have a proper MAS. Is it called license? Or yeah, so now we can see we're only left with crypto.com, CoinHako. What else? I don't know. I only know of these two. So yeah, probably for them to get some tax information is not that difficult. But I mean, well, it's the IRAS. A lot of people have not been paying taxes for various things also, so they have a lot on their hand. And if your income amount is insignificant, probably they won't be interested in you also. Okay, that's all for today. Bye bye. Bye bye.